quickly jump into a crash course of technical analysis and how to look at a chart and read it. Really all I look at is, if you look at the swings in the market, they make your uptrends and your downtrends. And downtrends are signified by lower lows and lower highs, and uptrends are signified by higher highs and higher lows. And looking at those, you can create things like support and resistance off of when there are multiple swings in one area. You know, based on what we talked about earlier, the supply and demand, anytime the market comes up here, well, sellers really start to outweigh the buyers and they push the market down anytime it comes up to this zone. And so that's how I like to look at this and say, okay, well, when it comes up here, I want to bet that it's going to go down potentially. And when it comes up here, I bet that it's going to go down. And eventually, you know, it'll eventually break because all these levels eventually break in the market. Another one is a trend line. It doesn't match the market all the time, but some downtrends in the market are very well matched to a trend line where the market comes up and hits it multiple times. And so every time it comes up to this trend line, you can say, okay, well, I want to, you know, take a trade here and bet that the market's going to go down, risking something like, let's say if you're doing a small account, risking $40 and betting that it's going to go down and making $100. And so that's how you can scale and trade over time. And then the biggest indicator that honestly grounds all of my trades and I use for every trade I take is if we go to most NinjaTrader has this and a lot of other platforms will as well, is if you just type in fair value gap indicator and turn it on, what it will do is it will draw these boxes. And what these boxes essentially mean is the market has had an unhealthy move. And so in the market, you have a move up generally has pullbacks in it. And because of that, it helps balance the buyers and sellers. The market here sold off really hard. You can see made these red boxes for saying that it was having an unhealthy trend to the downside. And because of that, once that trend kind of slowed down, started to get choppy here, it reversed higher. And this is where something like me, I would come in and I would say, okay, I really like this signal. It's overextended. It's come into, let's say, a support zone where I think it's going to go up. And I would pull up my drawing tool of my risk reward tool and say, okay, I want to bet in when the market breaks up here. You know, as I'm seeing this pullback, and then I put my stop below this swing because I like using the swings in the market. And then I would ride the move up and I would capture, you know, in this case, if you went for 3X on this trade, you'd make $150 risking $50. And so that's how you can trade the market effectively by looking for patterns like this.